Good evening, ladies and gentlemen. Today we're going to be reviewing company earnings that reported on Tuesday, January 31st, 2023. Those companies are Exxon Mobil, AMD, Spotify, Caterpillar, General Motors, and UPS. However, before we dive into the video, quick legal disclaimer. This is not financial trading advice. I'm not a financial advisor. All risk you take in the market is on your own. Do your own due diligence, and remember, you place yourself in the trade, no one else did. Now, let's dive into the video. Let's see what AMD reported for earnings. We're going to start off with that. The reported revenue was 0.69, expected 0.66. Which is good. Reported revenue is 5.6 billion, which the expected was 5.51. That's also good. However, I did notice that AMD reported some negative looking guidance, but also mixed with positive guidance. So it's really a toss up on what AMD reported. However, it's not the bad scenario the market was looking for. So there may be some bad news already priced into the stock that didn't come true. So we could see an upward movement. But with that, let's dive into the charts. First thing when we look on AMD, let's start with the bull case, is that you have a W forming on the daily right here. So what I would expect is once we break above the $80 mark, which does coincide with our 200 daily moving average that we have not been above since the start of last year, about in March, and we've basically been in a downtrending channel as we head down. So with this earning catalyst, we could see AMD come up all the way to $80 and possibly get invalidated or rejected off of the 200 daily. However, I do see a couple of harmonic patterns that are forming in the chart. The first harmonic pattern that I notice is the A to B leg, B to C, we project up for D, which brings us to $84.61, right in this region of resistance and support. So we could see AMD break through this 200 daily, proceed to the 50 weekly, and possibly get rejected there, or we could get a rejection off the daily 200 moving average. So that's one scenario. The second scenario is that AMD completes the secondary harmonic pattern of A to B, B to C. Remember, we have to not trade above this swing point here at about $80, which would coincide with the daily moving average, and that projects down to about $30.60, which would take AMD down an additional 60% from where we are here, which coincides with my view of the market that we're heading lower. So the market as a whole could drag down AMD. Now, remember guys, it's not going to waterfall down here. It's going to take time to get down here. There's going to be buying and selling opportunities along the way. However, with AMD being suppressed so far down from all its moving averages and just recently on earnings getting a mixed review that we have to see the close of it, I'm kind of in a neutral zone where AMD could be. I see more bearish potential because you are below two of the critical moving averages. You are just breaking above the weekly 200, heading to the daily 200. So we have to see how price interacts in this zone. You have that harmonic pattern, and you just recently got above the 50 daily moving average, which we could come back and retest support depending on how AMD does on big market volume tomorrow on open. Now let's take a quick view of what AMD is doing on the Lux Algo zone, just from our details. So pretty clear and cut and simple, guys. You are heading lower on the MACD. That's the first thing I notice right here. You are in the middle with RSI. So like I said, it's a neutral zone. However, you do have that supply zone sitting right here, probably targeting $78 as the middle. That would then complete possibly that harmonic pattern where we head lower. Now, to confirm the harmonic pattern, we would have to make a new 52-week low on AMD. Seeing how we have another zone here sitting around $56, I'd definitely be targeting AMD as a buy at $56 for a quick bounce once we get down there, or a short sell around $78. However, we need to see what volume does on the market open tomorrow and see how these areas are interacted with. Now, let's look at the weekly for a longer term price view for AMD. Your MACD is starting to curl over here. You're heading possibly into overbought territory on the weekly. So I do see AMD's ability to push up higher more limited than its downside. I see more downside potential. Definitely support around $50. And if we look at the $30 range that we mentioned before, which I do think AMD is going to come down here and retest $30, you have huge support down there. I'd definitely be looking at a nice long-term buying opportunity around $28 to $26, possibly dollar cost averaging around $30. Next, we're going to look at Exxon Mobil. All right, we're going to take a look at Exxon's earning whisper first. Reported revenue was $3.4. Their earnings was for 3.41, miss about 1 cent. That's not too bad. The reported revenue is $95 billion. The revenue estimate was $99.65 billion. That's about a big miss. However, Exxon did report some good forward-looking guidance during the earnings press conference, which maybe eased investors' minds. So now let's look at the charts and see what they're telling us. So if we look at Exxon on a daily chart, it is a clear clear-cut bullish company, guys. There is very little bearishness in this chart. Well, number one, you're above the 50. Number two, you're above both weekly moving averages. So you're heading higher. You're also way above the 1 week 200 moving average down here, sitting at $67. So Exxon recently did have a sell-off, and we're going to get into that, why I think that Exxon had that sell-off. So if we zoom out to weekly level, go real long-term view, going back to 2008, we can almost draw a trend line between this point, that point, and we started breaking out of that area. So Exxon on our prior earnings gapped up, came back down the week before. So we're starting to see the possibility of what's called a blue sky breakout. For all those that don't know what a blue sky breakout is new all-time high. Whenever you have new all-time highs, you never short a company there. It's just going to run you over. You want to see how high it can push and then come back to support for buying opportunities. Exxon's been in a massive uptrend. It has not stopped. You have gone 1 bottom, 2 bottom, 3 bottom, 4 bottom, 5 bottoms, 6 bottoms without any retracement to the downside. So now let us take a look if we can find any harmonic patterns on Exxon's chart, which I clearly see one right here. So if we go A to B, B to C, we project up to possible target of $133 for Exxon. Now, fair warning, guys, all harmonics are not complete. They can fall short. This is just a general area that Exxon could be heading to, and we should be actively looking at it along with other supporting information to make that decision if it's going to get up there. For me, you've been in an uptrend for almost 2 years now at Exxon. I don't see any weakness in that uptrend. You're above all the moving averages. You're heading higher. Definitely 133 would be a realistic target for Exxon. I do not believe oil is going to come down anytime soon, especially with the state the world's in. You could have a demand shrink due to a possible recession coming. However, oil and Exxon do correlate, but there's other parts of the business that can compensate, that could send the stock higher. And I do have a belief that oil could be going higher. However, the chart is very bullish. I cannot find anything very bearish. I will definitely be looking to sell option puts on Exxon to profit from the premium, or even buying them outright because if the company falls down, I may be interested in picking it up and dollar cost averaging on the way up. For Exxon, I would definitely look at stopping out at 133, completing this harmonic pattern, taking profit, or having it as a long-term hold. Pretty much overall, Exxon's a very bullish company in my opinion. And then if we look at Exxon on the daily with Lux Algo, you could have a reversal around the 123 zone. That's where you may have this push up to 123, come down, find support again after you've been on this nice uptrend. MACD is diverging and converging. In this area, we have the potential to definitely push higher, along with oscillation could be peaking out soon. So you may be starting to form a top on Exxon where it needs to retrace to form support. RSI is not overbought yet. It's on the bullish side. So definitely a lot of key indicators saying Exxon could go higher and continue to go higher, along with pullbacks along the way, along with its future looks bright. Next, we're going to go into Caterpillar. All right, so the reported earnings for Caterpillar was 3.86. The earnings whisper was 4.11. That's a pretty significant miss. Earnings consensus was 3.95, so a little lower from market consensus versus whisper. Still, it missed both. The reported revenue was 16.60 billion. The estimate was 16.08, so they did beat the estimated revenue that was reported. That's a good sign. Remember, EPS is not everything, guys. It's a manipulated number. I never trust it. I don't look at it. It is a kind of a warming gauge, as I call it, that gives you a sense of where the company on the initial view of earnings is going to be, but you really have to look at the press conference and see what they say. For Caterpillar, let's dive into the charts. They had a pretty bad miss on earnings. However, I do see a bullish sign here for Caterpillar. Clear and present uptrend happening here. Bounce off, wicking down off the bottom, pushing up. However, they did not completely push back all the selling pressure that was in the stock. They did miss on EPS, and they probably had some negative guidance or bearish guidance in their forecast because they have to be responsible to their investors. However, I think industrials is positioned stronger for a recession versus like tech, for example, or consumer discretionaries. So from the chart, Caterpillar is in a ripping uptrend. It hasn't been down to this 50 daily moving average. So I definitely would like to see a 241.75 retest of that and see if it holds. If it holds there, that'd be an excellent buying opportunity. If you break that, then I'd be looking at 228 as support or even coming back to filling possibly this gap off the previous earnings and testing these weekly moving averages and daily moving averages down here. For now, Caterpillar is in a slight downtrend short term, but is in a long-term uptrend. If we look at the weekly to see what it could be telling us, blue sky breakout like we talked about on Exxon, we did have a nice exhaustion, or I would say buying sellers up here, that people taking profit on it. However, we could continue higher. Also, Caterpillar's weekly moving average is around 241 for the daily, so finding sellers up here. So that's normal. After having a blue sky breakout, you kind of continue upwards, you exhaust, you come back down, and now you're seeing where the stock is going to consolidate. So I would definitely be keeping an eye on Caterpillar to see where it starts having exhaustion in the sellers and where earnings kind of puts it. If we look at LuxAlgo real quick for Caterpillar, we came down to a support area for price action. As you notice, there is 3 price action zones that are for support for Caterpillar on the daily. MACD is curving downward, so we need to see how it interacts with the zone, along with RSI heading over to the overbought with a oscillation divergence. So I do think Caterpillar has the ability to come back to retest this 240 region like we mentioned before, and then we have to see where it trades from there. Caterpillar, personally, I have tried shorting this company. It has eaten my money and taken my donation, as I like to say. So I definitely would be cautious when shorting Caterpillar. It has a very strong portfolio and strong investor base, so you can definitely get your money taken away from you if you're short side. And I'd be long-term bullish on Caterpillar, and as you see, the trend strength 76.24%, so you're in a strong uptrend. That 240 region is a definite buy for me on Caterpillar. However, I would like to see what the MACD and RSI do when we get down there. My suspicion is we probably get oversold and start curving on the MACD once we head down there, have a nice bounce. So I definitely would be putting a buy order down there or selling puts, in my opinion. Next, we're going to be looking at Spotify. So Spotify reported earnings of negative $1.43, with the earning whisper estimated to be $1.34. So missed earnings on the EPS. The market consensus was negative 1.28. That's pretty bearish. Along with the reported revenue was 3.23 billion, with the estimated revenue of 3.24. So in line with slight miss on the revenue. So this combined, overall, I'm seeing a very bearish earnings report without any good guidance to back it from being bearish. So if we look at the chart for Spotify, it tells us almost a completely different picture than what the earnings assumptions would be. However, I've always said whenever you gap up above a moving average and form almost like a shooting star pattern on the candle, which is you pushed up, you did have sellers present, which is one of those things that you got to look out for. However, Spotify has the ability to continue higher from here, or we could see the retest, which is where I'd be looking for buying opportunities of the weekly 50 moving average. However, since you gapped up above it, I wouldn't necessarily trust that move. I would like to see the retest. And also, if we look at Spotify from a long-term perspective, this is just my view, guys. You have lost so much value, similar to how we talked about with SoFi the other day. You're down 77% to the bottom and roughly 63% from the last peak up here. And from all-time highs, you are down close to 71%. So regardless, this company has lost a significant amount of investors' money. It has really never recovered that. Along with when you get down here, there's not a lot of hope in a tightening condition for Spotify to regain that level that it had before. It did form a bottom, but I do not see that classic volume capitulation that we want to see for a true bottom, thus leading me to believe this to be a fake bottom on Spotify. Momentary upswing as the market's going up. If we look at LuxAlgo, it's just a crapshoot, guys. You've had this massive run up. When you have sharp moves like this, they don't hold up. You're in the reversal zone, you're in a price action zone, you're past the Neo Cloud. It is just a crapshoot to begin with. This is going to reverse, and when it does, people are going to lose money on it. I do not recommend investing in Spotify at all. MACD is heading higher, so you could have momentary upside for the short term. You are overbought on the RSI. Oscillation is showing you a divergence. This is if you are in it, I would get out, take your profit and run. If you have a loss, take a smaller loss, because you have, depending where you bought, this is probably a good opportunity to get out. And afterwards, I'd be looking for sell side opportunities on Spotify. Price target of $53 once you get in, and seeing where everything goes from there, because it has overstretched 100%. Next, we're going to do UPS. So we're going to start off with UPS's earnings. Earnings whisper of 3.66, reported earnings of 3.62. The consensus for the market was 3.58, so it beat the market's consensus but missed the earnings whisper consensus. So that could be a mixed reaction. So we have to see what guidance they gave. The reported revenue was $37.03 billion with the expected revenue of $28.17 billion. So that's a slight revenue miss. Overall, this is looking bearish for the stock. However, let's look at what the chart's telling us. So if we look at UPS on a daily, it had a nice massive pump on the day, meaning they must have said something in their earnings conference call to lighten up investors' mood. What's progressive about it is you consolidated between these two moving average, the 50 daily and 200-day moving average, which is constructive. You did break above, break below, so they're squeezing together. You could be forming what's known as a golden cross. Remember, guys, I don't trade off golden crosses. It's just something to confirm that maybe we have higher uptrend momentum. You did get rejected slightly, and I need to see where it closes tomorrow off the 50 weekly, but it is constructive. You're starting to form a more bullish trend with the stock. The stock has been uptrending, as you can see here, from the bottom up, really forming push up, consolidate, push up. So we do have a couple of harmonics on the chart itself, which we'll show here. A to B, B to C projects down for the bearish harmonic. So this will be validated once we trade below the swing point here. Target price $136.60 for UPS. That would basically mean once we break below this 200 weekly moving average, that's going to be pretty bearish for any company that breaks that. So definitely be looking for that harmonic to complete or form a couple new ones on the way down. Now, if we look at the bullish harmonic, you have the A to B leg, B to C leg. This would get validated once we trade above this high point here. So break through this weekly, continue higher. Price target of $208, which would put you perfectly, and why I believe this to be the more likely scenario, at this resistance level right here of where we had previous doji and then sell off, creating a supply zone up here. This is a harmonic pattern I would definitely be looking on UPS, bullish for sure, and it's constructive. However, I would still advise caution to make sure we don't break below these two moving averages. You want to see more continued upward momentum. Now let's take a look at what Luxalgo is telling us. So for the daily, it's kind of what we predicted. You're sandwiched between two price action zones, one up here where you pushed up to, one supporting you down here. So there's definitely potential to go higher, but there's also potential to go lower. If we look at the MACD starting to converge together for more bullish price action, RSIs stay neutral for quite some time. So you are forming almost like a coil here and starting to break to the upside. This has definitely the potentials once you clear, I would say about 190 to continue higher to that $208 price point that we talked about before. That's when I would be taking profits and targeting a $200 possible exit, or if not, if we continue to 208. So I may be taking 50% here, another 50 here if I was long a UPS, or looking for short opportunities around there. Overall, it's a bullish stock overall, along with a lot of support on the way down. And last but not least, we're going to go to GM. So GM had a earnings estimate of 1.68 for the market, 1.74 for Earnings Whisper, and reported $2.12, beating EPS by a significant amount. Their reported revenue was $43.11 billion, estimated $40.3 billion. So that's a beat on both. And let's take a look at what the chart is telling us. So General Motors, kind of bearish and kind of bullish, both on the daily. So you have a doji on the daily, which shows indecision between buyers and sellers. They really couldn't decide what they were wanting to do with the company. You are forming what appears to be possibly a W. Now, if we trade above this $41.14 price point, then we would confirm this W. But you did, similar to UPS, have a consolidation around the moving averages, broke above it. I'd be looking for possibly a gap fill between this price point and here and the moving average around $38. If we retest bounce, we're probably heading higher. If we break below that, we could see more bearish downturn to the stock. Next, if we look at the stock's overall performance on a larger time frame, we do see a large bearish tone in it. You had a nice big sell-off. However, you are consolidating in this region, which is constructive. However, we need to see which this side breaks. With the earnings, you have the possibility to get above this $41 target. I would say to become truly bearish for me at this point, I'd be looking to see what GM does once it hits that $41 region. If it continues lower, I wouldn't participate in it because it's not something that I'm really looking to short, because it doesn't have a lot of movement per se. And then longing the company, I definitely, once it gets above this $41 price point, would be an interesting long. However, I have to see what the moving averages are doing. Now let's take a quick glance at Luxalgo for General Motors. you are, which explains the doji candle on the daily. You are in a price action zone, so buyers and sellers were fighting, people that wanted to push it up their earnings. You are, which is bullish, having a crossover on the MACD. You are slightly on the bullish side for RSI. So these two factors combined together, I do believe we could push higher, but we have to see. First, short opportunity at $41.91. I do believe you're going to get rejected up there. One, you have the 200 weekly. Two, you have a price action zone. So definitely somewhere I'd be looking for maybe selling opportunities, or looking after the rejection, where it rejects you, where it finds support, to maybe look for a long for preemptive break of that 200 weekly. So overall, GM is an interesting buy in the future, not at this point. With that, guys, I thank you for watching the video. If you guys like, throw down in the comments what you liked about the video. Hit like, hit subscribe. We do these videos every time earnings comes out on a lot of the companies. And if you like our fundamental analysis, check out the other video we posted today also on these companies.